been deeply opposed to crypto.
Last year, cryptocurrency funded every kind of dangerous criminal.
But I would not touch crypto in a million years.
Bitcoin is going to zero.
If I was the government, I'd close it down.
People are losing money in scams and huckster flim-flam artists.
These people who own these things should not own your money in any of those. I do think you're an idiot, okay?
It's over.
Go fuck yourself. Yourself. Is that clear? I hope it is. What do you do? Is that clear?
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks broadly rose on Wednesday as Oracle's blowout revenue forecast lifted AI hopes. Meanwhile, wholesale PPI inflation unexpectedly declined last month, bolstering the case for the Federal Reserve to cut rates next week. And guys, very mixed day. In fact, a lot of the movement we saw today was really just held together by some of the big names. Nvidia, AVGO here in the semiconductor space. AMD was up 2% as well. Anything related to AI or AI build out was really strong. Semiconductor equipment manufacturers, hardware manufacturers, and even some of the infrastructure names like Palantir and Oracle. The big boy up 38%. Tesla was up 2%. We saw a couple of names in the industrial space, again, related to the AI build out. They support names like Nvidia, AVGO, and Oracle, as well as some of the energy names and utilities. It was really just an AI story today after Oracle's earnings saw pretty much an inflection in upcoming revenue for that industry. Non-AI names took it on the chin though. Apple, Amazon, Meta, healthcare, some of the financial names, discretionary and the consumer defensives. So if it wasn't really tied to AI, it didn't really do well. That was sort of the rotation we saw here today. When you look at some of the sectors that won, it was about half and half. You'd see stuff like utilities, energy, technology at the top end of the heat, industrials as well. And then the names that, wouldn't benefit from AI, real estate, staples and healthcare, they were at the bottom of the heap right here, down negative 1.12%. Gold gained another half a percentage point yesterday. Gold really on an absolute tear. And the S&P 500 up 0.02%. You'd think with the earnings to go from Oracle, this number would be a little bit higher. That wasn't the case, but a lot of the movement today was really just from, large cap core, the large cap growth. They gained 0.2 and 0.9% respectively, but large cap value fell. Mid caps that whole was slightly down 0.1% today, and roughly the same here with small caps. You could see small cap value was flat, small cap growth was down 0.4%, small cap core in the middle there, down 0.2%. And all in all, it wasn't a crazy day for the market. Look, there were some really big winners, but the losers were. And also what really moved the market initially was PPI inflation data. So this week we get inflation data. So PPI is the producer price index. It's essentially the inflation that producers and business owners pay. CPI is the inflation that you and I as consumers pay. We normally get the CPI first, then the PPI, but this month they released the PPI first, and it came in at negative 0.1. Actual deflation versus last month, and the core PPI also came in at negative 0.1 as well. The consensus was 4.3. This could be a read-through for tomorrow's CPI, that we could get a slightly cooler than expected CPI. However, let's wait for the numbers, not try and predict, but rather react to the market. That being said, this is good indicator that we could actually see a cool print. And ultimately, tomorrow's CPI number is really what's going to determine the move for the market, from yields, the dollar, stocks, risk assets, equities, defensives. Everything is going to move on that CPI number because it's the last key inflation print before we get the FOMC next week. Also, something to note here, the 30-year mortgage, right? This was 7.2% just 3 weeks ago, now at 6.5%. So we definitely are starting to see rates and mortgages, those types of credit, move in the right direction. And ultimately, this is what the administration wants. And it's just good for the economy in general. You're going to start to see activity in the housing market, in the manufacturing space, if this mortgage rate continues to fall, especially if we get below the 6% mark. But all in all, cool inflation, really, really positive. Now, in some other news, a federal judge came out and blocked Trump's attempt to fire Lisa Cook. I mean, by doing this, does the judge pretty much give Trump the authority to fire her? Is that what happens? Because I don't think he had the authority to fire. It's very, very interesting that they actually came out and did this. She's probably going to vote in next week's rate decision. We'll see how that pans out for the market. And then in tariff news, Trump is pushing the EU to slap 100% tariffs on China and India in reports to pressure Russia to end its war in Ukraine. We'll see if this is the case. I don't know if they'll do it. Maybe they'll meet somewhere in the middle. Maybe they won't meet at all. That being said, Trump is really trying to end the war in Ukraine and really try to stop trade between Russia, China, and India by really putting pressure and asking the EU to put pressure on China and India as well. And I think the biggest news of the day was a $300 billion cloud computing deal that Oracle signed with OpenAI on the back of Oracle's earnings. And on the back of this, Oracle was up 33%. That's because they also released their earnings and then released their RPO, their remaining performance obligations, and it jumped in a very, very big way. Again, all thanks to OpenAI's $300 billion cloud computing deal. In fact, this meant guidance was way above expectation. And in fact, the company actually missed its EPS estimates and revenue came roughly in line. But when you have guidance like this, right, when you see all of this is about to be realized in the next 4 to 5 years, the stock is going to rip. And I do think this is Oracle's probably going to go to $400 before the end of the quarter. I would not be surprised. Other names moved in sympathy to this. CoreWeave is up 15%. I guarantee you CoreWeave is going to have another jump in OpenAI revenue. You're probably going to see CoreWeave's RPO go to 35, potentially as high as $40 billion. That would be like a 30% increase. And then Taiwan semiconductor manufacturer was up 3%, but that's because their revenue for August, they report their revenue monthly, jumped 33.8%. The market loved it, along with all of the AI news. And then you saw the stock up 3.52%. Again, this is a really good harbinger for what NVIDIA is going to do in the next quarter. And here we are reporting stellar numbers as per usual. And then Apple fell 3% today after very lukewarm reception to the iPhone Air. Now, in my opinion, I watched the entire Apple event. I thought the iPhone 17 was actually really good. It's a big jump up from the 16 to the 17, particularly the base model. I mean, if you're thinking of getting the 16 Pro, just wait, get the 17 base model. It's pretty much the 16 Pro with the new A19 chip. So I would probably wait for the 17. I might go buy an iPhone 17 myself. Like the Pro Max models are really, really good in my opinion, right? Everything from the cameras to the battery life to the new A19 chip. I really, really like these models of phones. I think they're going to sell really, really well. And I think the market's just not happy with the new iPhone Air, but we'll see how it plays out. Personally, I like the iPhone 17 lineup, but that's just my 2 cents. And then for everything we saw today, there was 2,800 advances, 3,400 decliners. We saw net outflows in both the New York Stock Exchange and the Nasdaq. However, if you actually measure the gap up from yesterday, because it's intraday market activity, we actually are seeing inflows with the S&P 500 up 0.2%. Market momentum continues to remain solid. The 20-day all the way to the 200-day is above the 50% mark. We've lost the 5-day and that continued to deteriorate from yesterday. And we did see a deterioration in a lot of these values from yesterday into today. However, we're still above the 50% mark, and this market is telling you that any dips we do get, buy those dips. Now guys, looking at the charts, we could see despite Oracle's earnings, we're actually seeing a red day here in the Nasdaq 100, the S&P 500 up ever so slightly, but the Russell 2000 down, the RSP down, mid caps down, small caps down. Again, not a crazy day, down less than 0.2% across the board, and growth really outperforming value here. But all in all, we're just seeing a bit of weird trade. I thought we would have been a lot greener today, especially in the Nasdaq 100, but that is simply not the case. And when we look at internationally, we see roughly the same, just slightly red, nothing crazy. The market continuing to just churn at the top end of this range right here. European stocks, Israeli stocks, Chinese stocks just falling ever so slightly. India bucking the trend. Crypto really, really positive. Bitcoin up 1.78%, Ethereum up half a percentage point. And then we look at some of our macro indicators on the back of that inflation data. The 2-year yield and 10-year yield fell, so the market's saying, hey, we're looking for rate cuts next week. Volatility ticked up ever so slightly. The dollar virtually flat. TLT gained 0.76%, and then gold and silver were up 0.42 and 0.35% respectively. Remember, guys, when we actually get our rate cuts, gold, commodity, silver, inflation hedges, currency debasement hedges do really, really well. And that is why we're seeing gold and silver rally, and to a degree, even Ethereum and Bitcoin. Cryptocurrency is highly sensitive to rate cuts, etc. Now, looking at the S&P 500 on the weekly chart, we continue to look very, very strong. Going to the daily chart, right? I mean, we made an intraday all-time high here for the S&P 500. We gapped up to the 6,500 area, 65.46, I should say, and we've paired gains and paired those gains ever since. And we've paired those gains. So again, that's another all-time high. Very, very solid. All we continue to do is just put higher highs, equal highs into new all-time highs. Now, I don't think we're going to get a closing all-time high. We might, but definitely an intraday all-time high right there. Let's go ahead and look at the Nasdaq 100. Did we get an intraday all-time high? It looks like an all-time equal high on a closing basis here for the Nasdaq 100. Very, very solid stuff. And just like the S&P 500, higher highs, higher lows into all-time highs. There's nothing bearish about this at all. And any pullbacks we do get in this market, you simply want to go ahead and buy those tips. There's not much to say, right? And the indices don't even look that overheated. When you look at something like the RSI, yes, we're, above the 50% mark here at the 60 mark in the RSI. But again, things are not looking overheated, and we definitely can, and we certainly can move higher. The same is true for the S&P 500, right? Things are not looking super overheated, although we are above the high end of the range right here. Tomorrow we'll get an update as to what the options market is looking at and see if that moves up or down. I guarantee you that is going to move to the upside here along with the gamma flip. That being said, equity markets, especially large caps, look really, really good. I mean, even some of these small cap names are trading at their 52-week highs. The Russell 2000, the RSP is trading near its 52-week highs. In fact, the RSP, that's an all-time high, by the way. It may just see, so trading at its all-time high. Mid-caps near its 52-week highs, and the S&P 600 trading near its 52-week highs. There's nothing bearish about any of these charts. Stocks are rallying. Stocks are looking really, really good. And ultimately, I think the market right now is waiting for the CPI print. I think if we get a cool CPI print, that's going to further bolster rate cut expectations, and I think we go move significantly higher, led by stuff like the RUT, the Russell 2000, mid-caps, small caps. But we'll leave it in a case where we get cooler than expected inflation, and like the 2-year and 10-year yield actually like fall significantly on the back of that, right? I think we just see an everything rally across the board. Equities, crypto, gold, silver, international stocks, everything will do really, really well under this regime. Now, let's actually look at crypto, just because it's probably the most interesting to look at on a day-to-day basis. And you can see that Bitcoin is starting to put in its bottom right here. Put in its bottom at 107,000. We said we were big buyers here at the 109. In fact, we were big buyers this entire year. I said right here, for those of you that have been following my channel, in the April tariff tantrum lows, we bought significantly here. We added right here. We added to our positions here at the 109,000. And ultimately, we're looking for the new all-time highs for Bitcoin at 123,000. Ethereum, as long as we hold above this 4,000 level, we are definitely going to all-time highs. I think we see 6,000 for the end of the year. And I think these are the only two crypto plays you want to be in, Ethereum and Bitcoin. If you want to allocate, I would say allocate 60 to 70% into Bitcoin, 30 to 40% into Ethereum, and they should be anywhere from 1 to 5% of your total portfolio. So adjust accordingly. I keep about 5% of Bitcoin and Ethereum in my portfolio. So I would recommend you do the same. And if you look at it, right now, stocks make up about $60 trillion in the US, right? Bonds make up about 40 trillion. Bitcoin and Ethereum make up about 4 trillion, or just under 4 trillion in total, which means you should roughly have about a 3 to 4% allocation into crypto. If you're looking at like a market weight in the season, you're looking for a diversified portfolio, it would make sense to actually keep, a 4% or 5% or as low as 1% allocation low. Now, guys, we're going to look at some names, right? Some names that I think if we do get a pullback, we definitely want to go ahead and buy. I think one of these names is Nebius Group. I think if we get a pullback as far as the $75 area, we want to go ahead and buy the dip. I don't think we're actually going to get there. I think as low we're going to go is probably like the $80 mark right here. But I would say cash secured puts at $75, right? Going out to maybe the 10th of October, you can get $2, $1.80, $1.90 for that. Really, really solid. It's paying you to wait, and you're getting it at a great support level right here. I think NBIS is a really, really good long. Another long I do like, if you want, maybe not so much as a speculative name in the infrastructure place, is CoreWeave. You can see that, yes, CoreWeave did put in a high, and we are putting in lower highs, but it does look like we are actually going to go ahead and break that trend. We put in an equal low right here. We've broken above this interim high we made at the $100 level. We're now at 115, right? And ultimately the next target we want to go ahead and take is the 149 area. There's a lot of room to cover to go ahead and break this high, but we are seeing momentum in the right direction. CoreWeave is up in a very big way today. At the 15% mark. So I think, if we get back to this $100 mark for CoreWeave, we want to go ahead and buy that dip, because I do think into the end of the year, these infrastructure names are going to run. Another one is Iron, right? Iron or Iris Energy was up like 15% today. Let's quickly go ahead and have a look. No, 8%. So it's up 15% yesterday. I think if we get a pullback to the $25 area somewhere around here, potentially even just the $30 area, that's an opportunity to go ahead, buy the dip. Because I do think, again, all of these infrastructure names are going to move significantly higher. Now, Oracle, the problem I have with Oracle, right, is that they're not a pure play infrastructure. They have like a software business and a lot of other legacy businesses. However, again, if we do get a pullback sort of like to this 270 area, go ahead, buy the dip in Oracle if you want a large cap stock, because I think Oracle's a $400 stock. I mean, if that RPO comes to fruition, the market obviously wants to see evidence that OpenAI has the money for that. We don't know if they do, but if they do, I mean, these infrastructure names are going to absolutely rip. OpenAI is single-handedly keeping the AI market up together. It starts OpenAI. Then what's next? Is it Grok? Is it Minstrel? Is it Perplexity? Are they all just going to give massive billion-dollar contracts to these cloud providers? I mean, if it's starting with OpenAI, there has to be a second player. There has to be a third player. There has to be a fourth player, right? OpenAI cannot absorb all of the AI infrastructure dollars. There has to be other players. And if that is the case, we could see RPOs even grind up significantly for CoreWeave, which is $30 billion. I wouldn't be surprised to see $50, $60 billion if that is the case. So I think these infrastructure names, you need to have a space in your portfolio. Personally, I do like CoreWeave. Many people say it's got a lot of debt, but the truth is all of these infrastructure names are going to have a lot of debt. CoreWeave decided to take that debt out first. And from now on, because of how high their stock price is at $50, $60 billion, right, they can actually start issuing shares to go ahead and fund a lot of their operations. Whereas these like smaller names like NBIS, they won't be able to issue shares because they'll have to issue like $5 billion worth of shares for a $15 billion market cap, dilute 30% of their holders. Whereas like with CoreWeave, they could dilute like 1% to 2%. So I personally do like CoreWeave, but all of these infrastructure names are really, really good plays. I mean, you could also just look at something like Google. If you want more of a diversified business, again, in the large cap space, I think any type of pullbacks here, to the 220, 215 mark, buy those dips in Google because we are going higher. I think the place to be between now and the end of the year, even into 2026, is these AI infrastructure names. And if they have a software aimed to their business like Google, like Oracle, that could actually be seen as a positive, although your alpha might not be as pure play direct as something like CoreWeave, Nebius, for Iris Energy. But all in all, guys, very, very solid play. I like all of these names. I think the market's looking really, really strong, regardless. I mean, we did have a red day today, but it's not a crazy red day. And all of these names are trading at their 52-week highs or all-time highs. The S&P 500 made an intraday high. This is not bearish, and any pullbacks we do get, just want to buy those tips because everything is playing out for us to simply just move higher in the market and for the S&P 500.
And diving into sentiment, the fear and greed index continues to be at this neutral zone right here, guys. We've pushed from the greed into neutral as market indices has entered this volatile path here in September. However, we have seen a lot of bullish momentum in tech stocks lately after what happened with NBIS and Oracle's earnings, and the fact that we are still in the neutral zone is just fuel for us to go higher. Now, don't get me wrong, we can definitely push into the fear zone. What I'm just saying is, based on where we are right now and what the market is telling us, especially with the AI trade, this is really, really good place to be, and it's telling us the market is not overheated or is not euphoric. However, when we look at the market fundamentals, particularly the treasury yield, the 2 versus the 10-year yield curve, what we are seeing is a flattening / re-steepening of the curve, which suggests growing expectations of future Fed rate cuts. We know this is true, and a potential economic recovery, which could support risk assets. However, the recent streak of flattening hints at short-term uncertainty or sticky inflation, which may keep volatility elevated. Looking ahead, this environment tends to favor bonds more than gold as falling yields increase bond prices. And when we actually look at the relative value of gold versus US treasuries, we can see the treasuries appear to be cheap. Gold appears to be expensive. This might actually be the time where we are going to get rate cuts to potentially start allocating to bonds. Now, I would still keep the allocation pretty light, and I definitely would not exit gold or Bitcoin. Nonetheless, Based on the data here from top-down charts as well as LSEG, treasuries do look like a buy, especially with 4 to 6 rate cuts on the way. Now, diving into the macro, when we look at the Fed's GDP now for Q3, we're sitting smack bang on 3%. Very, very solid stuff. Now, guys, the labor market is worrying, but when we look at the internals of the labor market, when we look at disposable income, right, and employee compensation, when you look at it 1 year annualized, 6-month annualized, as well as 3-month annualized, we see numbers above the 4% mark, employee compensation well above the 5% mark right here, and both disposable income and employee compensation outpacing PCE inflation, as you guys can see right here. This is telling us that even though the labor market is deteriorating in terms of job numbers, people that are employed are seeing real wage gains against the price of inflation. And this is going to keep consumerism alive, especially for those that do have jobs. Now, looking at data for the rest of the week, tomorrow we get the CPI data. So we get the core inflation rate. Now the core inflation rate, we're looking for a consensus of 3.1. And then the headline inflation rate, we're looking for 2.9%. We also get initial jobless claims through 235K is what we're looking for. Then Friday, we get Michigan consumer sentiment. In terms of earnings tomorrow, the big one is going to be Adobe. That's pretty much it, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.